disbursements drop in first quarter of 2019 as oil prices fall. No money is missing or stolen, Central Bank insists. Domestic debts, interagency collaboration framework for payment in the offing. Details of these and more on Monday's edition of Business Express, reaching you on the network service of the Nigerian Television Authority. I am Amina Noujaim. Thank you for joining us. The fall in oil prices slightly affected government earnings in the first quarter of 2019 as the Federation Allocation Account Committee disbursed 1.929 trillion naira between January and March this year. The figure represents a 0.45% decline from 1.938 trillion naira disbursed for the same period in 2018, but 36.7% higher than the 1.411 trillion naira disbursed in the corresponding period in 2017. The information is contained in the latest issue of the quarterly review of the Nigeria Extractive Industry Transparency Initiative. Total FAC disbursement in first quarter 2019 ended the recent trend of more than 2 trillion naira. Disbursement which lasted for 3 consecutive quarters. A breakdown of the disbursement showed that the federal government received 803.18 billion naira in the first quarter of the year. This was a 1.18% lower than 812.8 billion naira the federal government received in the same period in 2018. The Central Bank of Nigeria has cleared the air on a purported audio recording of selective conversations amongst the governor, deputy governor, and some senior officials about a fraudulent transaction. The management of the Central Bank of Nigeria says the discussion was simply to prefer solutions to a misunderstanding that affected the bank's balance sheet. A statement from the CBN says as the economy continued to recover from recession, the bank provided about 650 billion naira in loans at 9% with a 2-year grace period to 35 states of the Federation. These monies were distributed to states monthly with documented approvals of Federal Ministry of Finance and the Presidency. In closing the bank's 2018 accounts, external auditors in their draft accounts erroneously classified about 150 billion naira of these loans as bad, which negatively affected the bank's balance sheet and shareholder funds. Therefore, the selective conversation being circulated was simply a discussion to ascertain why the auditors took that position and the next step to resolving it. The bank therefore urges all well-meaning Nigerians to disregard this audio and continue to trust that the bank is doing everything it can to represent their interests in the best possible way. Following the reappointment of the central bank governor Godwin Emefiele for another term, the bond market responded positively on Friday, a day after the announcement. Professor Uche Owaleke is in the studio to discuss how markets reacted to the announcements and expectations from the CBN governor in the next 5 years. Professor Uche Owaleke is a professor of the Capital Market and Director of Research, Securities and Exchange Commission. Welcome to the program.
My pleasure, Amina.
Okay. Now, the bond market turned bullish on Friday. What would your take be on that?
Okay, when you say a bullish bond market, of course you mean that prices moved up.
It was a reaction to the president's announcement.
Yes, that prices moved up. You notice contrasting performance between what's going on in the bond market and the equities segment. The truth of the matter is that, of course, in the bond market, if prices are going up, it means yields are also coming down. So the truth of the matter is that in periods of uncertainty, the bonds are considered a safer, asset class. So you find investors, going into bonds.
Is it because government is involved?
Not necessarily. You have, in my view, what is going on now is still rebalancing, from equities, away from equities, to bonds. I don't think both sides, whether on the bonds market or equities market, what has happened recently, has to do with it, because our markets are not that so informationally efficient as to impound these developments on on asset prices. So I don't think there is a direct link, so to speak.
Okay, slightly moving away from the bonds market, would you see the reappointment of the governor of the central bank for a second term as a step in the right direction, sort of like a continuous?
Of course, you have hit the nail on the head. Yeah, it is. It's one appointment that portends stability for the financial system, for the capital market in particular. I've had people say, I've also read it, that the market fell on Thursday, the stock market fell on Thursday, and also on Friday, and they said it was in reaction. I said that's far from it.
I was about to ask you that.
It cannot be in reaction to the appointment. These things have been, with us. The legacy issues that have been responsible for the, downward trend in equity prices. Even as a close of trade in today, Monday, the market has also dropped. So I want to tell you that it has nothing to do with the reappointment.
So why did the market drop today?
The market is dropping on account of the factors that are already known, globally and even domestic factors. Okay, the global issues are still there. The issue of the policy of the Federal Reserve in the U.S. is still a factor. Investors have not really started coming back. Those are fled, initially. And there is also, a few days ago, this renewed, if you like, U.S.-China, trade tension. And there's also this other aspect that may also explain it. NTA is about to be, be listed by introduction, any moment from now, and investors are already trying to get some money. They are selling off now so that they can get some money to take positions in MTN. So the point I'm making is that MFL's appointment is one appointment that is, I've said it, in somewhere else, that it portends good omen, for the capital market, because it's what it tells the investor, what it tells the even foreign investors, okay, is that there is going to be continuity, is the policy consistency, because investors don't like policy somersaults. Okay, we already know the direction MFLA is headed, and that direction will be maintained. Okay, the interventions particularly in the real sector, will continue, and that will be positive for the capital markets. So in the medium to long term, the reappointment will be positive for the stock market. So the reappointment has nothing to do with the fall. The present equity situation has nothing to do with the reappointment of MFL. That's the point I'm making.
Okay, let's talk about investor confidence in the economy so far. How far?
Yes, Investor confidence, I am pretty sure will pick up as with time. Of course, part of what has held the markets back has been the fact that yes, of course, the 2019 budget is still yet to be implemented, assented to, even though it has been passed. Okay, and the cabinet is yet to be formed. We still don't know the color, but the appointment of Emefiele has signaled to the world, okay, that the president is going to put in a lot of round pegs, in round holes, this time. So by the time he forms his cabinet and the budget is out, I expect investors' confidence, to improve substantially, and the tempo in capital market activities will increase. So I see the market rebounding significantly by the third quarter of 2019, by which time all these issues must have settled down. So investor confidence, yes, for now investor sentiments may be weak, but I see a stronger investors confidence as we progress into the year.
Okay, now moving away from investor confidence, with the various interventions from the Central Bank of Nigeria, where would you see the forex markets?
Yes, I also foresee stability in the exchange rates for a long period of time. We've enjoyed this stability for quite some time now, especially since the central bank introduced the investors exporters window in April 2017. And why I'm also optimistic that the exchange rate will continue to be stable, okay, is because of the quantum of reserves that we have, okay. Reserves in excess of $44 billion, and where the oil price is. Oil price is still doing well. Even the futures prices, oil prices tell us that it's not likely to drop below $60 per barrel, which is the budget reference price. So if you have oil prices doing well, if you don't have challenges in the Niger Delta region that will affect our output, of course the oil revenue will be strong, and that will impact reserves. So our reserves are strong to maintain a stable exchange rate. So I don't have any fear at all. And with the disposition of the central bank governor, okay, who is out to continue to defend the naira, I think there will be stability in exchange rate. And the good news, of course, is that we've seen a lot of this convergence in rates across the segments of the forex market, and that will continue.
So you see a situation where the interventions will continue?
Yes, definitely. And that's why I'm happy that Emefiele got reappointed, because the interventions, they will continue. You could get somebody else that will come and say, oh, let's stop intervening, let market forces determine, let's flow the naira, and that will be a problem for this country. So I am happy that he's reappointed, and his policies will continue, including the policy on a restriction of access to forex with respect to some items, 41, 42, 43 items, because that has had a way of conserving foreign exchange and even improving a local production, and we've seen that also leading to job creation. So Emefiele's interventions have helped in no small measure in bringing back this economy on the path of growth.
Okay, now still talking about the CBN governor, when he is confirmed by the Senate for another tenure, what do you see him doing to the MPR? In the past, we've seen a consistent retaining of rates.
Yes.
So looking at the MPR and other factors in the economy, where do you see him going with his agenda?
Yes, I want to see him pursuing the path of accommodative monetary policy. He has already signaled that in the last MPC meeting in March, where the MPR was reduced from 14 to 13.5 by 50 basis points. So for me, that's a signal that the central bank is ready to now relax monetary policy a bit, in order to spur growth and also increase the ability of the banks to lend to the real sector. So the central bank governor, if you look at his body language, okay, is committed to using monetary policy to support growth, this time around. The rates were held at 14% for so long a time because of the high inflation rate. Today, inflation has moderated considerably to 11.25%, and even the core inflation is single digit. So with inflation now contained, okay, I see a situation where the central bank will now will now be in a position to pursue an accommodative monetary policy.
Okay. Professor Uche Owaleke, Professor of the Capital Market and Director Research, Securities and Exchange Commission. Always a pleasure having you on Business Express.
Thank you, Amina. Thank you for inviting me.
Moving on to minimum wage. The struggle for the realization of the 30,000 naira new national minimum wage is not over yet, as adjustments have to be worked out between union leaders and their employees before a fresh salary table is released. Emmanuel Ahimiro, trying to satisfy the curiosity and anxiety of Nigerian workers on the minimum wage, spoke to some who knew the processes involved.
Haruna Abdullahi is a staff of the Federal Capital Territory Administration. He has been involved in the protest led by the organized labor for successive governments to honor the constitutional provision of reviewing wages every 5 years. At last, the present administration, after a series of negotiations, reached an agreement with labor, and President Muhammadu Buhari assented to the new minimum wage bill of 30,000 naira on the 18th of April 2019. Like millions of Nigerian workers, Haruna is happy.
We're expecting huge salary this month, but then there should be some small areas too from the month of April, because it was assented in April.
If possible, next month should kickstart.
These expectations may, however, not come to pass immediately due to processes involved.
Minimum wage in the law, the act says somebody should not be paid less than 30,000. That's a law. So if you're already earning more than 30,000, do you expect to be paid higher? The answer is no. But then, when you raise those that are below 30,000, for the rest who are earning higher, they would like to say, okay, you have given these people, what can we get? And that is through collective bargaining. That's why we have unions. That's why we have industrial relation practice. They will engage and look at their employer, what is their capacity to, move forward with additional wage bill and all that. They will iron all those things out. That's how it will affect the rest. But as far as the minimum wage is concerned, it is limited to those who are below the national minimum wage at the point it is established. The working out of the template is to ensure that you don't dictate to union. You don't dictate to them. They negotiated the minimum wage. Equally, you give them the chance also to negotiate whatever others can get.
Another trusted partner in the private sector also shares the opinion that collective bargaining agreement will allow consequential adjustment to be effected without leaving any worker out.
Because if you apply 30,000 naira to the least paid, there will be consequential increment on every other salary earners within the wage structure. So they need to sit down, agree with them, to say, okay, these are the implications. This is how it's going to be, so that subsequently there are no rupture in the industrial harmony.
Labour, on the other hand, feels the law must be implemented immediately.
You cannot again go into sectorial or go into union by union negotiation. What we know is that the benchmark has been set. Once the benchmark has been set, they must give a guideline of implementation.
For now, Haruna Abdullahi and millions of other workers will have to keep their hands crossed. Whatever the process is, they want to start enjoying the new wage just as pensioners who have always been beneficiaries of every wage increase. From 125 naira in 1981, the minimum wage was reviewed to 250 in 1991, 5,500 in year 2000, 18,000 in 2011, and now to 30,000 naira.
Thank you, Emmanuel. Stocks on the Nigerian Stock Exchange went down on the first day of trading, depreciating by 0.98% to close at 28,565.67 basis points, while market capitalization dropped to 10.731 trillion naira. as 214.6 million shares exchanged hands by investors valued at 2.784 billion naira in 3,856 deals. UACN, Guarantee Trust Bank and UBA were the toast of investors, topping the charts in the stocks. USCA traded 41.2 million shares, GTB 37.9 million shares, and UBA recorded 15.9 million shares. Now, in order to boost the Asset Management Corporation of Nigeria's ability to recover high-profile debts estimated at 5 trillion naira, the federal government has resolved to bar debt companies and individuals from its official businesses. Vice President Yemi Oshinbajo at the weekend disclosed plans by government to set up an interagency collaboration framework comprising relevant government ministries, departments and agencies, and supervised by his office to ensure that such debts are not allowed to do business with government henceforth. Oshinbajo, also chairman of the Economic Council, further assured that government would deal decisively with individuals and organizations on the debt list, seeing as they have made it impossible for AMCON to resolve the outstanding debts, thereby holding the entire nation and economy to ransom with their bad behavior. Adverse weather conditions in the United States to continue to depress grain prices as red pepper price spiked by 17% to 7,000 naira per basket. Here is a commodity watch. Dubai index down 1.6%, Abu Dhabi index falls 1.7%, and Saudi stocks trade at 1% lower in early trade Monday amid regional geographical tensions. Bossede Abel has an update on global stocks.
Notes Monday 13th May 2019. As the latest round of trade talks between American and Chinese negotiators concluded on Friday without a trade agreement. Markets in Europe traded lower, with investors continuing to monitor trade developments between the US and China. In Asia mainland, Chinese shares declined amid uncertainty on the US-China trade front after tariffs on Chinese goods were raised last Friday. The Shanghai Composite tumbled 1.21% to close at 2,903.71. Nikkei declined 0.72% to close at 21,191.28, while the Hang Seng Index topped 0.84%. Stocks in the United States were set for a rough start. Dow futures were down more than 262 points, implying a decline of more than 32 points for the open. S&P 500 Nasdaq futures were similarly pointing to a negative start as well. Stocks in Africa opened mixed. Tunisia's and South Africa SA Africa Top 40 started on rise, while Nairobi All Share, Ghana's GSA Company and Namibia overall were negative.
Many thanks, Bossede. The dollar index against a basket of 6 major currencies remained unchanged at 307 naira to a dollar on the interbank market and 363.50 to a dollar on the parallel market. Let's see how it's exchanging. And this is where we wrap up this edition of Business Express. You can access all previous episodes on YouTube, and our Twitter handle is NTA News Now. Thank you for your time. Remember, join us same time, same station on Wednesday. I am Amina Noujaim. Bye for now.